Welcome to XRP Financial Horizon. Now, before we get into anything else, I want you to sit with something for a second. Meta AI, the same artificial intelligence engine that Mark Zuckerberg's team has been quietly building into one of the most powerful technology platforms on Earth, just put out an XRP price prediction. And the number it's pointing to by the end of 2026 is the kind of figure that makes people either laugh it off or start doing math on their portfolio. We're going to walk through the whole thing today, what the model actually said, what the chart looks like right now, and whether any of this holds up when you pressure test it against reality. No hype, no fluff. Just the analysis you need to actually make sense of where XRP stands and where it could be heading. The bear case said something unusual, and that's worth paying attention to. Here's where I want to start, because this detail gets skipped over in most coverage. When Meta AI laid out its bear case for XRP, it didn't just say price falls and move on. It specifically noted that even in the downside scenario, the asset carries a cushion, a base of long-term holders, and the legal precedent established through the Ripple and SEC case resolution. Now think about what that actually means. The pessimistic forecast still acknowledges that XRP has structural support most assets don't carry into a difficult environment. That's not a throwaway line. That tells you something real about how the model is treating the SEC case outcome. Not as old news that the market has moved past, but as a permanent shift in how XRP gets evaluated and how deep the downside can realistically go. More than a year after that case closed, it is still anchoring the floor. 3 reasons Meta AI sees XRP reaching 3.50 to 5.00 by end of 2026. The bull case puts XRP between $3.50 and $5.00 by the end of 2026. From where it sits right now around $1.12, that's a significant move, somewhere between a 3 and 4 times return if the model plays out correctly. But what matters more than the target is what's supposed to drive it there, and Meta AI gets specific about that. The first driver is the regulatory clarity that came out of the Ripple and SEC resolution, which opened the door for US institutional players to engage with XRP more openly, and for exchanges that had delisted it to bring it back. That piece is already in place. It's not a future event, it happened. The remaining question is whether the adoption that was supposed to follow has actually shown up in meaningful volume. And that's where things get more interesting. The cross-border settlement angle is the most defensible part of the thesis. The second driver Meta AI identifies is what it calls utility dominance, specifically through RippleNet's on-demand liquidity corridors and the possibility of central bank digital currency integrations that route settlements through XRP rather than around it. This is probably the most grounded part of the entire bull case, and here's why. The argument isn't that XRP is going up because crypto goes up. The argument is that XRP has a specific defined role as a bridge asset in cross-border foreign exchange settlement, and that role is genuinely difficult for competitors to replicate quickly. Correspondent banking is slow and expensive. RippleNet's technology directly addresses that. If CBDC partnerships materialize in a way that uses XRP as the liquidity layer rather than bypassing public ledgers entirely, the demand side of the equation becomes a lot more concrete than most crypto narratives ever get.
A spot ETF plus post-halving liquidity could change the entire setup.
The third driver is the one most people in this space are watching closely right now. Meta AI flags a potential spot XRP ETF approval, combined with the liquidity dynamics that historically follow a Bitcoin halving, as a catalyst that could produce the kind of altcoin rotation the market saw in 2021. That cycle is worth remembering clearly. Bitcoin ran first, capital built up, and then it spilled into alternative assets with genuine use cases and mainstream name recognition. XRP fits that profile. It has the brand, it has the institutional-grade narrative, and it has a cleaner regulatory situation than almost any other major alt. If a spot ETF gives institutions a familiar, regulated way to get exposure, and if the macro environment is favorable when that approval comes, the math on 3.50 to 5.00 becomes considerably more believable. The bear case is real, but it's a stagnation story, not a wipeout. Now the downside. Meta AI puts the bear case floor at $0.70 to $1.00, and the paths that lead there are specific. Macro liquidity tightening that pulls risk appetite out of the market broadly. Central bank digital currencies developing their own rails rather than partnering with public networks like RippleNet, which would quietly undercut one of XRP's most important growth stories. Or simply, Ripple's adoption stalling, continuing to operate, signing deals, running pilots, but never reaching the deployment scale that would justify a meaningfully higher valuation. What's notable is that this bear case is a grinding sideways to lower scenario. It's not XRP crashing 70 or 80% from here. It's XRP drifting down and sitting in an uncomfortable range while the rest of the market moves on. For investors, a slow bleed with no clear recovery catalyst is its own kind of painful, even if it's less dramatic than a sharp collapse. Voice. The chart has been stuck in the same range since February. Here's what that means. Let's look at what the price has actually been doing, because the chart adds real context to everything Meta AI is projecting. XRP peaked near $3.65 last July, sold off hard and fast, and then found a holding pattern somewhere between 1.20 and 1.55 that has been the effective trading range since February. 5 months of going essentially nowhere. The low near 1.05 in June was the first real test of the bottom of that range, and price bounced from there without breaking below it in any sustained way. That's not nothing. When an asset tests a support level after a prolonged period and holds, it suggests the sellers who wanted to exit have largely done so, and that the buyers stepping in at those levels have some conviction. It doesn't guarantee a breakout, but it does change the picture from active breakdown to genuine consolidation. Voice. Why the bear case floor is further away than it looks. Here's a detail worth spelling out clearly. The Meta AI bear case of 0.70 to 1.00 sits well below where XRP has actually been trading for the past 5 months. For that scenario to play out, XRP wouldn't just need to drift lower, it would need to break through a support level it hasn't violated in nearly half a year. That takes real selling pressure. It takes one of those specific negative catalysts Meta AI identified actually materializing and hitting the market hard enough to push through a floor that has absorbed repeated tests. That doesn't make the bear case impossible. Markets break floors that hold for months all the time. But it does mean there's a meaningful distance between where XRP is sitting today and where the worst-case scenario actually lives. And that distance matters when you're thinking about risk. Voice. The RSI is about as neutral as it gets. Momentum is flat. The RSI on XRP right now is sitting around 38.56, with the signal line barely separated at 37.17. That gap of less than 1.5 points is about as indifferent as a momentum reading gets. It's not oversold, which would suggest sellers have exhausted themselves and a bounce is likely. It's not building toward overbought either, which would suggest buyers are gaining control. It's just flat. And honestly, that flatness is the most accurate single-number summary of XRP's current situation you could ask for. The price hasn't broken down, but it also hasn't broken out. The momentum isn't building in either direction. The market is sitting on its hands, watching for a reason to move, and the RSI is reflecting exactly that. Anyone telling you they're confident about the near-term direction from this setup is reading more into the chart than is actually there. The 1.20 level is the line that matters most right now. With everything the chart is showing, the most important price point in the near term isn't 5.00 or 0.70. It's $1.20. That level has capped every rally attempt since February. Every time price has pushed toward it, sellers have shown up and pushed it back down. The current bounce off the 1.05 June low is now running into that same ceiling again. If this bounce clears 1.20 and holds above it, the next area of interest is $1.55, which was the top of the range that capped price on the upside over the same period. If it fails again at $1.20, you're looking at another retest of the $1.05 area at minimum. That's the setup. Clean, defined, and directly relevant to how you manage positioning right now, regardless of what you believe about the long-term thesis. The catalysts haven't arrived yet. That's the honest summary of where XRP stands. Here's the most important thing to understand about Meta AI's prediction, and about XRP right now in general. None of the 3 catalysts the model identifies, ODL volume growth, CBDC partnership acceleration, or a spot ETF approval, have shown up in the price in any clear, sustained way. The regulatory clarity from the SEC case is real, but even that hasn't been enough on its own to push XRP out of this 5-month consolidation. The bull case and the bear case are both equally theoretical at this point, both waiting on external events that haven't happened yet. That's not pessimism, That's just an accurate reading of what the chart and the fundamentals are actually telling you. The opportunity is real, the risks are real, and right now the market genuinely doesn't know which way this resolves, and it's honest enough to show you that in the price. When leaders consolidate, attention moves to the next layer. Something worth acknowledging is that when the major names in crypto are range-bound and waiting on macro catalysts, experienced participants often shift some of their attention to earlier stage projects where the upside math is fundamentally different. Not because they're abandoning their conviction in XRP or Bitcoin or Ethereum, but because the opportunity set changes when large caps are consolidating. At $1.12, XRP needs enormous capital inflows to get to $5.00. A smaller, earlier stage project doing real infrastructure work needs far less to generate a comparable percentage return. The risk profile is completely different, and the failure rate at that stage is genuinely high. But the asymmetry is also genuinely different. That's why the smart money often gets busy during quiet market periods, rather than sitting still waiting for established assets to move. The cross-chain problem is bigger than most people realize. One of the underappreciated structural realities of the current crypto landscape is how fragmented liquidity actually is across the major chains. Bitcoin, Ethereum, and Solana each have deep pools of capital and real user bases, but those ecosystems largely don't talk to each other efficiently. Moving value between them is slow, expensive, and creates a worse user experience than it should. This is the same fundamental problem XRP's ODL technology is trying to solve on the institutional and cross-border payment side. The gap between where cross-chain infrastructure is today and where it needs to be for crypto to function as a genuinely unified financial layer is still significant. Projects addressing that gap from first principles, not wrapping existing bridges in new branding, but actually rethinking execution at the infrastructure level, are working on something that has a long runway of relevance, regardless of which specific assets win in the current cycle. Voice. Ground floor entries only make sense with careful research and honest risk assessment. If you're looking at early stage opportunities while XRP consolidates, the most important thing is entering with clear eyes about what you're actually doing. A pre-sale at a very early valuation can look extraordinarily attractive on paper. The numbers are small, the percentage upside if everything works is massive, and the excitement around a new concept can make it feel more certain than it is. But most early projects don't reach meaningful scale. The ones that do tend to have a specific and defensible use case, a team with credible execution history, and a market structure problem they're genuinely solving rather than gesturing at. Due diligence at this stage isn't optional. The gap between a promising early concept and a project that actually delivers is wide, and the time between entry and any kind of meaningful return can stretch longer than most people expect when they're in the middle of the excitement. What XRP holders should actually do with all of this? So where does this leave you as someone holding or watching XRP? The Meta AI prediction is worth taking seriously, not because an AI said it, but because the underlying framework is logically constructed, and the catalysts it identifies are real and trackable. The 3.50 to 5.00 bull case has a path. The 0.70 to 1.00 bear case has a path. And where price actually goes depends on external events that nobody can predict with certainty. What you can do is watch the levels that matter. $1.20 as near-term resistance, $1.05 as the floor that needs to hold, and $1.55 as the target if that resistance finally breaks. You can track the catalysts, ETF news, ODL volume data, CBDC partnership announcements, and macro liquidity conditions. And you can stay patient, because range-bound markets test patience more than anything else, and the people who stay informed and disciplined through the consolidation tend to be the ones who are positioned correctly when the move finally comes. That's what this channel is here for. We'll keep watching it with you. See you in the next one.